Hello, everyone, and welcome to today's webinar. So I've just said go here to let everybody come in and get comfortable. And in just a few moments here, we will get going with our webinar today. I'm excited to do today's webinar. 3 companies that I own and that I follow in the Maven letter that are all proximal to each other, sort of Nevada and Arizona. And certainly I did that by design because I do believe that majors are specifically interested in simple projects in good jurisdictions. And these projects either already are or have the potential to become precisely that. So that's why I invited these 3 companies to this webinar. I do have Doug Eaton from GGL, and I have Michael Povey from Gold Basin, and I have Todd Hilditch from Riley Gold on the line with me now. But before we show their fantastic faces, I'm going to do a little talk of my own about what I think is going on in the gold space. I promise I'll keep it short because, you know, there's a lot going on, so it could go on for quite some time. To context, obviously the thing right now is that we're going into a tightening phase. It's funny how we've been focused on this for months already, and in fact it is still pretty accommodative out there. In fact, the Fed is actually still buying treasuries, but the end is nigh. Does it have to end? It absolutely does, and that's what this set of charts shows. I mean, it shows the Fed funds rate, which we're all very familiar with, which was slammed to the ground during the financial crisis, stayed near zero for years. Then they tried to inch it up, and then they were like, oh, it's not working, and then they were starting to step it back down. They were stepping it back down back then in 2019 because the overall economy just wasn't that strong, and so they were tightening for the sake of tightening. At that point, they were raising rates so that just to get off zero for the sake of getting off zero. I think that's quite different than what's happening today, and I think that's an important thing to hold on to. Right now, we have a pretty strong economy. We have very low unemployment and good growth. There are threats out there. There are always threats, but I think it's important that the fundamentals, the rationale for raising is actually very real right now, as opposed to back in 2016, 2017, when the rationale was a little bit tenuous. And so a correction in the stock market was the reason, really, that they stopped that tightening cycle. You can see the Fed funds balance sheet at the bottom. It's been a party. The S&P has profited from that party immensely. But yes, it absolutely has to end. And the reason it has to end is because of inflation. Inflation at 7% steals half of your purchasing power in 10 years. That's not okay for anybody. So yes, that has to be fought. Whether raising the Fed's funds rate is a super effective way of fighting inflation, we'll see. There's lots of debate. That's not the point of this call today. I don't know how much of inflation comes from trade bottlenecks versus COVID handouts versus stockpiling that happened versus reopening effects. I don't know. We shall see. There's a lot more questions than answers out there, and there won't be answers to a bunch of this because COVID has been such a weird thing. But at the end of the day, we have rampant inflation and we have pretty strong GDP growth. Like I say, some real reasons that this super accommodative phase has to end. So what does that mean for those of us who are interested in the gold space? It's a good thing. I have 2 charts here that demonstrate how gold gains with rate hikes, especially early in the cycle. I would have only used the second one, but then Visual Capitalist put out this lovely image just this morning that shows how gold generally performs with a rate hike cycle, and it's a nice visual capture, and that's what Visual Capitalist does, captures financial things in a nice visual form. And you can see that gold often, look, 6 months after a rate hike, the average gain is 11%. That's fantastic, right? I put that up here because it's really important to remember that gold generally gains with rate hikes. Here's the way that I had captured it before Visual Capitalist put out their lovely image. And this goes back far. This goes back to whatever, 1976. And it shows that in general, when you have the start of a tightening cycle with the Fed funds rate, gold goes up. That is, I think, the most important thing to look forward to. And it's not very long, not very far ahead at this point. In fact, it's 1 month away, which is when the Federal Reserve will have their March meeting, and we are very much expecting that they will raise rates at that point, whether it's 25 basis points, potentially 50 basis points. Both of those are very much on the table. 50 basis points is quite likely. They will hike, and it could well be it could well boost the gains that we are seeing in gold right now. Now, when I say the gains we are seeing in gold right now, it's a reasonably short-term capture, right? 2 weeks ago, I would have been like, stupid gold. But in the last 2 weeks, we've had some nice moves in gold. And I think that the pending tightening cycle is a big part of that. But there's a bigger picture. There's always a bigger picture at play. And I think that this stuff that's on this slide, I'm sorry that there's a lot of words, but what's on this slide is my attempt to, in very brief, capture the bigger picture impact of shifting to tightening after this incredibly accommodative over a decade, right? So there was that short period where they, did Operation Twist, they stopped buying bonds and they tried raising rates and then they dropped rates down again. Really, negating that or excluding that, we've really had over a decade of highly accommodative conditions from the Fed. And now we have a pretty robust economy, very low unemployment, high inflation. These are real reasons to tighten. And the thing to remember with that is not, the first thing to remember is that gold usually gains with tightening. The second thing to remember is that you can't tighten without upsetting an apple cart. I don't know exactly which cart will get upset first and to what degree, but it's not going to be just smooth sailing. That's not how it works, right? And so, I mean, John Maudlin here did his capture of it, Wall Street is hooked on super accommodative conditions. And then now the Fed is up against a wall, they have to tighten, and that will aggravate someone. Will it be the bond market first? Will, debt service costs be the thing that gets pissed off first? Sorry to use a slightly crude term there, but will that be the thing that gets mad first? I'm not sure. If it is, this chart on the bottom is one to remember. So the thing that is perhaps best correlated with the performance of the S&P is the earnings. And if we have higher debt service costs, then earnings get impacted, right? And so that threatens the direction of the S&P. But there's other things at play here. It's not just debt service costs that might get mad. We also are seeing already a rotation from growth, and growth has been the thing, right? Super speculative tech stocks and unicorn IPOs and just big tech have been the story of the broad markets for years now. But those things are already underperforming, and I think it's very important to realize that big tech will underperform in 2022. I was reading about this last week, and there's a few numbers that really stood out to me are from 2015 to 2019, Apple grew at 2.7% compounded annually, right? Nice growth rate, pretty sustained. In 2021, Apple grew 33%. And it's partly because, iPad sales grew by 75%. This is a direct impact of COVID, right? Everybody had to teach their kids from home. They had to work from home. Everybody needed tech. And so they, Amazon benefited, Apple benefited, all of the big tech names that drive the S&P really benefited from COVID. And that is unsustainable. We won't have that juice going into big tech this year. So big tech will underperform this year. And I think that will have an impact on the overall valuation of the S&P for sure. It will have an impact on momentum and sentiment. And we're seeing it already in the fact that investors are stepping back from the speculative sides of that. So the profitless tech stocks and the unicorn IPOs and stuff, these things are really struggling, have been already for a few months. This is, a lot of people are capturing this as a rotation from growth, which has been the thing, to value, which is also a common characteristic of a tightening cycle, because profits are good and growth just makes sense. It's there, it's an easy bet, and at some point a growth cycle tips over, and that's when you really don't want to be in the really speculative stuff. So this is happening, this is part of what's at play, and it's pertinent to gold investors because gold is definitely on team value, not on team growth, right? So that's sort of the big picture stuff that's going on. I also want to, I don't talk a lot about technicals, but I think this chart, I found this chart pretty compelling, and so I'm including it. This is Robert Sin, who's known in social media as Goldfinger, great technical analyst, especially in this space. he didn't believe that the huge high of August 2020 was as reliable as the high from January. So he drew his downtrend line from January to today. Nice clear line. And then you can of lower highs, but matched with a line of higher lows, which creates that triangle. And then we have in the last week broken decisively up out of that triangle. How much weight you put into technicals is up to you, but I do think that that's an important or an interesting chart, certainly to pay attention to. Bottom line, I think that we are fundamentally set up for a move up in gold this year. I'm not going to say exactly when or how fast or any of those things because my crystal ball is broken and I have learned not to make specific predictions because it increases my odds of being wrong. But my big picture prediction is that we are going to have a nice year in gold. So if that makes sense to you, then what do you do with that? Well, there's lots of things that you can do, but one of the things that I like to do is bet on projects that are going to make discoveries or grow assets that are under-recognized and that have the potential to really fit the bill in this gold market. And so in this gold market, it's really important to remember that majors and mid-tier producers have tons of money. They're making lots of money. They don't have sufficient project pipelines, so they have not been buying a lot. They're not desperate for production tomorrow, but you can't let yourself get to that point. You have to buy years in advance. So they need to fill their project pipelines. They're showing engagement with that. Talk to companies with more advanced assets and their discussions, their confidentiality agreements and whatnot, those are really stepping up. So majors need to fill their pipelines. And they absolutely prefer good jurisdictions. In the last gold bull market, there was a lot more going into difficult jurisdictions or areas that needed a lot of infrastructure build to build big projects, and that did not work out well. There was a lot of other factors at play. It wasn't just like the fault of the jurisdiction, but it definitely means that majors are not particularly interested in having to build super long roads or get to isolated places or struggle in jurisdictions where the potential for permitting problems is significant. So they prefer good jurisdictions and they want straightforward deposits. Straightforward in terms of metallurgy, in terms of engineering, in terms of hopefully permitting. Everybody always likes straightforward as opposed to complicated. The market knows all of these things that I just said. They're pretty clear. And that's why good discoveries and deposits in good jurisdictions with good discoveries are getting rewarded right now in this market, even though as a whole, the junior space is still struggling. I know my portfolio isn't performing the way I want it to, given the price of gold. I think that will change, but the fact that those good discoveries are getting rewarded is one that I'm holding on to because as the market strengthens, that reward will continue and will become more so as the sector as a whole starts to get more interest and support. So with that groundwork laid, let's move into 3 projects that I think fit the bill that I was just saying here. So they either already are straightforward deposits with potential of scale in good jurisdictions, or they have the potential to become precisely that. And jurisdiction is definitely the key that brings these 3 together. So to start, please, Todd Hilditch. I would love to ask Todd to show his pretty face and tell us the story of Riley Gold with its projects in Nevada. Todd, take it away.
Thanks, Gwen, and thanks for having us today. Really appreciate it. Why Riley Gold? We're active in the gold exploration. We've got a management team from mine finding through to M&A. We do have 2 projects located in Nevada, and to Gwen's point, good jurisdiction, safe jurisdiction, a jurisdiction you would take your family on vacation to and not have to worry. We do have activities going on exploration-wise at our 2 projects, which we'll get into, and we have a tight share structure with about 17% owned by management. Capital structure, we spent a lot of time and energy making sure this was right from the get-go. So we have 32 million shares issued and out, 45 million fully diluted. You can see our warrants and options here on screen. Share price-wise, as Gwen alluded, in the junior space, we haven't been quite as robust as we'd like to see, but that can be said about most. We do have Paul Stevens Management Group involved with us, and we're quite proud of the structure and hope to keep it in good tact. So Nevada, yeah, not only is it extremely well endowed with a gold, from a gold aspect, and the 6th largest world producing region, most of that gold within trends, but Nevada as a whole produces up to 5 million ounces a year, very steady. Both of our projects are in that area, and infrastructure, employment base, it's one of the best places on earth to do business from a mining standpoint. So our 2 projects, the details below this slide we'll get into. Both are between 20 and 25 square kilometers, well positioned near past producing and producing mines. We'll talk a little bit to the work that we've been doing, but these, more or less fell to us through relationships. And Nevada's a big place. There's an amazing amount of great companies working down there. But it's interesting. Sometimes a project, due to gold price, to just timing, doesn't get the attention that it needed. And that's the case, I think, in both of our 2 projects here. So the first one, Tokop, it's 100% owned. It sits sort of between the Tonopah and Beatty districts, an area that's had past producing mines, current producing, near 10 million ounces produced over time. The Cores of the world, the Augustas, the Anglos working down in Beatty, which has been a very hot district, is sort of the area that we're in within the Walker Lane. So why did we get excited when it first landed with us? It's an intrusive related system, gold hosted in shears and in veins, similar to Eagle Mine up at Dublin and Fort Knox in Alaska. When we first were introduced to this, went to Dr. Richard Silito, along with Ruben Padilla, actually, who had worked with some work at Cisco, and had spent a little bit of time here before they got taken out in that 3-way merger back, I guess, about 11 years ago. But what was cool is the first thing we noticed was the historic drilling, 12 meters of 2.5 grams per ton, 18 meters of a gram and a quarter, trenching, 18 meters of almost 2 grams per ton. So at first blush, it was an exciting, geez, how come this isn't being advanced? But again, opportunity, and for other reasons, it was sitting on another company's books that had moved into the lithium space, as a matter of fact. So the first step was, wow, look at these grades. Let's see what else we can find. So historic rock and soil sampling before we got here, you can see that it's tough to see on the screen exactly with regards to this map, but there was a fair amount of work done. Some of the quartz veins that were northwest in strike up to almost 1 ounce per ton gold. There were sheeted quartz veins that were up to 10 grams per ton. A whole series of 8, 9, 10 gram per ton gold across these vein sets. So obviously that was checking another box besides the early stage drilling. Even some of the soil sampling, from a soil sampling standpoint, up to 1.4 grams per ton, that's high. So, there was another box checked, another part of the exploration piece to really dig in, and that's when we completed on the deal for Tokop. So in particular, first thing we did, we stepped in and we wanted to do some of our own confirmation. You can tell on the scale here, the main Tokop area where there's mapped vein sets over about a kilometer and a half. We were getting up to 19 grams per ton, 15 grams per ton. So that was not only matching, but in some cases improving the previous work. Some of the channel chip sampling too across some face broad scale was 5 meters of 5 gram per ton. So the next box was checked, which was, okay, we've done our own homework. We're now in a very centralized small area of the 20 square kilometer property, but we were getting the same type, if not better grades. A little bit of visual gold here that we panned out of one of the samples. So first thing we did as well is we wanted to follow in on the RC drilling that was completed by the previous operator, but we wanted to use core drilling. We announced a 20-hole program. We completed on 12. I'll tell you why in a minute. But our first 3 holes came back with spectacular results: 2.6 meters of over 9 grams per ton and up to 17 grams per ton over over a meter and change. So as well as 1.6 gram per ton over 5 meters. So again, the box was getting checked on the basis that we went in, we were learning more. The previous operator drilled, we felt parallel to veins and we wanted to come across them in a perpendicular nature, but the next box was checked. We're now drilling, getting same if not better grades that they were on their drilling. Our sampling program, then we stepped back. We Google Earth back and wanted to get off the main toe cop area. We did over 330 soil samples, 400 rock samples, up to 72 grams per ton. It assisted us in finding other areas on the property that really needed some additional attention, not just that main area where we can see and touch and feel the vein sets. There was a new gold anomaly down in an area that we found of an epithermal target, which we'll get to in a minute. But again, next box checked, we zoomed back and we saw more gold in other areas several kilometers away. So where do we sit today? Most of the work besides the drilling was in the fall of this past year. So September, October, November, December, we are still getting results and information in. And even though this looks like a very busy slide, it includes previous rock and chip samples, soils, our rock and soils, the mapping and structural work that is still a work in progress has not been completed, but you can see here that along with the first layer of geophysics, which we're still reinterpreting as we speak, it's starting to show that we've got a bit of a district scale opportunity here. As far down as Cabin, a couple kilometers south of the main toe cop area, northeast, the wells, Hell's Gate, there's areas that definitely need more attention, and that's what we're planning on moving forward into 2022. This is one area. Now, this is very exciting. One person I didn't mention when we were going through our beginning stages here of who we are is Hillary Jawkins joined us. She worked down in Augusta at Bullfrog and mapped the pit. When she first came up and worked with us, we did a soil grid sample down in the southeast of the property, 2 to 3 kilometers off the main part. And there's old drill holes that are under alluvium. There's nothing that sticks out that says, hey, come drill me. 12 meters of almost a gram per ton and 6 meters of 1.5 included. So it's an area that you wouldn't automatically jump to and say, oh, wow, we've got to go drill here. But this is where, and you can see in that picture that there's an epithermal veining that we're able to sample and where some of the drilling was. So we think we have 2 systems here on a more district scenario, an intrusive related system as well as an epithermal system. So progress, I have already talked to February, March, April, up through October. If you wanted to focus in on January, we did get our last 9 holes in. We do have additional samples yet to come. We're completing the gravity survey review as well as the mag survey and putting it all together, and expectations are coming up with a drill plan for sometime in the next couple quarters. Next slide, we'll move on to our Elephant Country project. We are really excited to have this. We call it the Pipeline West Clipper project. It's approximately 25 square kilometer and is unbelievably well situated right next to, in fact, adjoining claim boundary with Nevada Gold Mines, the joint venture of Newmont and Barrick. So if you don't know, Nevada Gold Mines and the Cortez district is unbelievable. The gold endowment is 50 million ounces of past production, current reserves and resources split between Pipeline and Cortez. On the particular map you see down at the very, very south end, what's not labeled is 4 Mile. And all the way up through our property and the adjoining Ridgeline and Nevada Gold Mines is an extremely great corridor of gold resource. This kind of zooms in a little bit, give you an idea how we're somewhat sandwiched between Nevada Gold Mines and their production, as well as Ridgeline Minerals, who staked up to our western boundary. And they recently announced a few months ago a joint venture with Nevada Gold Mines, which I believe they're currently drilling now. You can tell that the corridor here runs right, it includes all of the companies here and the projects. This gets us in a little bit tighter to our property boundary where you can see Gold Acres on the map, which is their furthest left open pit. We are 600 meters from the open pit. That particular resource is just short of 1 million ounces of just about 3 grams per ton as part of Nevada Gold Mine. But the Pipeline Mine and the Gap Mine, which are now basically one, we were down there recently, it seems to be that they've connected. It's an unbelievable opportunity for us. Our targets will be the same rock formations that the Cortez complex has, which is Horse Canyon, Wenban, and the Roberts Mountain formations. And we will not need to go, in our opinion, yet much deeper than about 700 meters for our target. Okay, so how do we find the Wenban? The Wenban is the secret layer, the secret sauce, if you will, to the production out in this area. One historic drill hole was 6 meters of almost 0.7 grams per ton, and that was in the Wenban. We are currently reviewing, reinterpreting several gravity surveys, geophysics surveys, and they would be designed to look for high angle and low angle faults. Where you can see in this image, you've got this golden hue around those sort of rectangles. That's the Wenban, and the surveys are intended to find those dotted lines, the high angle faults, low angle faults, and where we would look to drill target would be in those red ellipses. It's nothing new. They've been mining from that for years next door at NGM. Long story short, with regards to this project, we don't think enough work's been done historically. We don't think enough drilling has been done to deeper areas, and that would be our intention. So again, we've sort of talked about what we're doing. Right now, our ongoing is geological review, geophysics review, drill logs, core shack samples, etc., with the goal of coming up with a phase 1 drill program, hopefully sometime here in this year. Value proposition is really our company, our management team, which we didn't get a chance to expand upon earlier. Please go to the website to check that out. We've got a strong team. Structure-wise, we're in good shape. We try to maximize shareholder value with capital allocations. We've got 2 good projects. Catalyst for the next 1, 2, 3, 4, 5, 6 months are pretty heavy. We've got a lot of information coming back to the market, and look forward to sharing that with you when we do. Thank you very much, and Gwen, for putting this on. Really appreciate it.
Thanks so much for being part of it, Todd. That's fantastic. All right, I should have mentioned to all of those who are listening that we are keen to take questions at the end of the presentations for me and or for the presenters. So certainly use the control panel there to send in your questions. I'm compiling them, and I will make sure to forward them to the appropriate guy. They all happen to be men today. At the end of these presentations. With that said, I would love to ask Michael Povey, who was kind enough to get up in the middle of the night. He's located in Western Australia, to get up in the middle of the night to join us here for this event, so he can tell us what's going on with Gold Basin. Michael, please take it away.
Thanks very much, Gwen. I appreciate it. Yeah, I guess Gold Basin. There's our board as it currently stands. I'm actually a mining engineer. Charles is the geological side. John Robbins, many of you will know, is the chairman. So we've got a good, strong board, and we're also a member of the Discovery Group, which many of you, of course, in Canada will know very, very well. So we're pretty happy about that, and I think we've had some strong support already with regard to our project. I'm pretty certain we'll have a lot stronger support over this next year as we're progressing. Right, so we're situated in northern Arizona, northwest Arizona. We're about 70 miles as the crow flies from Vegas. Infrastructure all around us. The main highway is only sort of 5 kilometers away from it. The 330 kVA line runs across the top of the lease, in fact. So, infrastructure-wise and access-wise, we really couldn't be any better. And as Todd mentioned previously, between Nevada and Arizona, they're regularly rated the top 1 and 2 mining jurisdictions in the world, and that includes where I'm from in Western Australia. It's still a good place to do business and to do exploration. So we've got inside that, we've got currently, this kind of fits a classic case of what this subject matter is about gold that's been known in the area and now being really looked at. Essentially, Gold Basin was an area that was mined by the classics of old-timer mining in the 1890s through to probably the mid-1930s. The cyclopic deposit we're noting there and the Fry mine, which is in just at the top of that, were were probably the most significant ones there. Fairly decent grades. The fry, it turned out, was around about 18 grams a tonne, according to the local government mining engineer who visited that. And the cyclopic was about 6 grams. But it disappeared off the radar from about 1936, and really nothing happened until the late 1980s, where a couple of companies had a look. They obviously, gold price was not fantastic then, but they didn't really have too much of a plan. A number of shallow holes were drilled in the cyclopic deposit, really looking for some extensions of a small pit there. And really, they were sort of every which way. Probably couldn't take too much from it. Even though there was probably 500 holes, there really wasn't a clear pattern of what was going on. But from that point on, for the last sort of 20 odd years, it's been held by the claim owners. They kept the package together. They were mainly a group in New Zealand, strangely enough, until myself and Charles, and then through the Gold Basin, we're able to consolidate 100% of the project area, which is normally 31 square kilometres at the moment. We've got other chunks of ground here which are currently with the BLM with under application. There are areas that we've picked up, which I'll chat a little bit later, due to some of the geophysical work that we completed in 2021. Most of the current work has been concentrated on the cyclopic deposit, mainly because there was a lot of historical drilling. As I say, we didn't really understand what structurally was going on until we really completed a program of 30 holes at the end of 2019, and then through 2021 we drilled another 103 RC holes. We also put in 6 diamond core holes as well, primarily on the case of 4 of them for some metallurgical test work, but they also have come up with some, confirming some of the structural things that we're looking at there. So what we found really was that through, as you can see there, it's pretty busy. There's this particular slide, which is not really only saying cyclopic. You've got Fry slightly to the north, the ring bear deposit, which we haven't touched yet at all, and we've got these other sort of star crosser areas. They're all the rock chip sampling that's been undertaken. I think we have a database of somewhere like 5,000 of these, if not more. And you can see these are all the touches over 1 gram. So there's a lot of area that we haven't expanded into yet, and that's going to be part of our current program that we're going to talk about a little bit more. So what we learned from the drilling program in 2021 is the intersections, that we've got this from surface layered structure. It's all oxide, nothing else in it. It's completely clean, the tiniest amount of silver, which really is almost less than the gold. And we've got this from surface, and we've only really, the average hole depth at the moment is about 90 meters. So we've got this layer upon layer. They pinch and swell, they sort of join into one another, probably hydrostatically controlled, but at the moment we can see this is a north-south axis, where we can see this continuity, because that's really where the greater density of drilling has occurred. But on the east-west axis, which is coming towards the screen and back towards the stealth, there's a lot less coverage, and they were just obvious gaps, which we basically knew we had to fill in. We had enough information. There was previously a resource on this project done for an ASX, a JORC one, and this drilling we definitely could have expanded on that, but we felt, well, we got more drilling to do. There was too many obvious gaps, particularly on this east-west axis, and we had multiple targets on the ground as well, which we hadn't even touched on. Yeah, so within Gold Basin itself, you can see we've got 2 primary areas there. You see cyclopic in the central region, which I've just sort of covered. We've also got the stealth. Now, the historical drilling, as you can see, has been quite a lot. We've got some good intersections, and we really, very difficult targeting all these targets in one go. So we've really worked on the cyclopic, in which we've got an expansion program, which is currently underway, and we've got the stealth area, where historical drilling has provided some really decent intersections. As you can see on the right there, we had 45 meters over 2 grams and 62 there, you see over 1 gram. Now, all that lease there, the complete stealth target actually lies on private minerals grounds, which we've also got the surface rights to. So we've been pretty fortunate, and as such, we were able to drill that pretty quickly. And that's actually been underway in the last 2 weeks or so. We've drilled into the stealth, and we've got a little break now for some maintenance, and we'll be going back to both the stealth and the cyclopic for the targets that we've already identified. We've also got an area to the south. The area to the south, this PLM target. It's always worth in mind, almost all these areas here in blue, we've got some drill, not so much on the outer or the cyclopic targets to the north here, but the PLM target, the stealth, a little bit to the north, we've got some drill holes, historical drill holes, which are, you know, just showing the same type of layered intersections that we've got through the cyclopic. It's a long way from cyclopic down to the PLM target. There is, you know, some 3.5 Ks or so. And again, when you look at the drilling there and historical drilling, it really shows the same type of flat line layered structures, just like we see in both the stealth and the cyclopic to the north. So what have we been up to? In 2021, we actually did a lot, actually. Probably we managed to complete those 103 holes I mentioned, RC, plus the diamond holes. 4 of those PQ core were primarily for metallurgical test work, and that's currently with KCA. They're about halfway through the column leach test work that we commissioned. We did have some initial bottle roll tests that we announced a couple of weeks back, which showed some, you know, good recoveries really, from essentially from up to about 86%. Nothing nasty, very low cyanide consumption in the leach, and that's sort of showing up again in the column leach. So we really expect to have some, you know, good to very good recoveries. We also completed essentially two major surveys, the aeromagnetic survey and a hyperspectral survey. That we completed those. We haven't put too much of those out because we wanted to do the full package, and that includes the IP survey, which is literally just been completed as well, and we're just waiting on the interpretation. But we found that with the hyperspectral survey that we did, it really highlighted the extra ground that we actually wanted to pick up, so identified some extra targets. So we kind of kept that internally until we actually managed to pick up that ground. And through the aeromagnetic survey that we did, which was a pretty detailed 3D model, we've generated some targets, some deeper targets on the property that we're, you know, very interested in. And the IP survey really is looking at whether these things are chargeability or not, and we've got some, you know, something at depth there which may be as interesting as what we feel is a very large oxide deposit on the Gold Basin property. So as I said just now, we've really got drill program. We started again in early January with regard to the second phase of our drilling program at Cyclopic. We've got another 100 odd holes that we've targeted, but we're pretty flexible because we're able to look at these things. We've got a large permit now in terms of where we can go. So as the results come in, we may add a bit more to Cyclopic or a bit more to Stealth, but our target is to actually drill both of those two projects. They're only 900 meters apart. We really don't know what's going on in between the two deposits. There's a little bit of an elevation difference, but the 900 meters in between, there's been a few holes which have you know, intersected the same type of structures, but they're very few. I mean, literally no more than 3 or 4. So we obviously love to know what's going on between the two and whether they join or not, but certainly at the moment we've got 2 parallel deposits of similar length, similar size and scale, which are running essentially on 2 major structures, the Cyclopic Fault and the Stealth Fault. So, you know, effectively we've actually completed most of all the major work that we need to, apart from the drilling. Once we're fully funded all the way through in terms of our drilling program, the met test work will be completed in the next 2 months or so. The surveys are being completed there, so as far as we're concerned, we eventually just have to get on with the drilling. It's a large lateral extent, and the grade does vary, as you would expect, between these layers. But the layers seem to be reasonably consistent in terms of there are multiple layers, which sort of, let's say, pinch and swell. Grade will vary. You literally can drill 10 meters away from one hole, and you might have, you know, 3 meters at a gram, or you might have sort of 10 meters, it's a half a gram, you know, 10 meters away. It's just what happens there. But overall, it's a large bulk deposit is what it's looking like. Looking at it internally, it really is, you know, an operation where it's very hard to identify any real waste in the project at the moment. There is no easily definable areas. The small layers that sort of creep in between the small waste layers, if you like, or lowly mineralized areas between the economic mineralization, you wouldn't be able to separate out. So it's essentially going to be bulked out. if drilling shows that to be different in the future, then obviously, my opinion will change. But at the moment, it's literally something right from surface, and that it's got almost zero with regard to the stripping ratio. I mean, it's literally something like 0.4 if you was actually practically to manage it. Our major plan is that we literally just carry on drilling, keep extending the lateral extent with regard to cyclopic, both east and west. We're going to also expand north towards the Fry Mine, which is another 400 meters to the north. And we've got this large area from Stealth, which is really similar type of lengths. We've got at least 2 kilometers within Stealth to drill. And again, it's got extensions, probably extending for at least 6 kilometers along the major Stealth fault that has really been untouched. So we've got a big area, multiple targets, and a lot of drilling to do in this next 6 months.
Thanks very much for that, Michael. I've written down some questions that I will pester him with after we hear from our third presentation today. And for that, I'd love to ask Doug Eaton to step forward. There he is, and take us through the GGL story, which has been quiet, but I think is going to get busier this year.
Thanks very much, Gwen. Yeah, you're certainly right. It is going to get busier. We'll work our way through the presentation fairly quickly here, so we'll have some time for questions at the end. Okay, so we have a very tight share structure, and as you can see, the public float is only about 40%, 45 million shares roughly currently outstanding, up to 50 on a fully diluted basis. Currently have about $700,000 in cash, but that will grow shortly. So GGL has been known for many, many years as a diamond explorer in the Northwest Territories. But what's important for today's talk is we've pivoted, and we're now focusing most of our efforts on a gold project that we picked up in the Walker Lane of Nevada. It's called Gold Point. Okay, again, we're midway approximately between Reno and Las Vegas. The area traditionally has been known as a high-grade gold-silver producer. The initial acquisition we had 2 former producers on it of consequence, but we've consolidated our land package, and there's now actually 4 former producers on our claim block. It's directly road accessible, there's power to site. Probably the most important thing about this project is it's seen almost no modern exploration. The last production was in the 1960s. Since that time, the claim ownership was highly fragmented, and aside from a very small amount of underground sampling done in the 1980s, there was no work done until we acquired the project. It's truly a camp scale opportunity, and I think as we go through the slides, you'll understand that. And definitely our target is more than 1 million ounces of cyanide recoverable material. Okay, history. Past work showed that there was about 92 to 98% of the gold recoverable by cyanidation, and about 53%, 80+% for silver. Most of the sampling was done, or the only recent sampling was done in the 1980s. There was 35 samples taken from the underground workings, and they averaged about 12 grams per ton gold, pretty impressive. But what was important was that the old timers, because all of the production was from underground and it was all based on high grade mining, there was a lot of areas of low grade that were exposed in the underground workings and in surface cuts that wasn't appreciated. And as we've worked, we found lots of material that's creating a gram to 5 or 6 grams, which would have been of very little interest to the old timers. So the small scale production in the past occurred from the 1880s up till 1962. The estimate from the 2 original workings on the Corp property was about 75,000 ounces of recovery. Cutoff grades supposedly were about 10 grams per ton. And the workings extend to a depth of 275 meters vertically below surface. And to the base of those workings, everything is dry and oxidized. So we've got a hugely deep weathering profile, which gives us potential for, excellent cyanidation recovery, if we find a deposit of some size. Right now there's about 17 veins that are known, but we're adding to that every time we go to the property. Okay, so what is the potential here? We can obviously look at the existing stopes. There's lots of material left behind adjacent to those stopes. We know that many of the slopes are open down dip for extension, and we certainly can look at that possibility. We know that the vein systems extend for kilometers along strike, so we can certainly look along strike of the main workings and find new areas. There's certainly evidence of secondary veins that parallel the main structures that were overlooked by the earlier workers. And we can also look out underneath overburden covered areas. Those are the vein structures, but we've also identified potential for intrusion-related bulk tonnage targets, and you'll see some evidence of that in a few moments. Okay, underground sampling, our initial work, we went in and it turned out that the Great Western Mine, one of the producers on our Corp property, was open and really quite easily rehabilitated. So we went in and did underground sampling there. We did a lot of surface sampling, and that included both prospecting and rock sampling, and some soil geochem. We did airborne magnetics and radiometrics, which we'll be doing more of that shortly. And we drilled some reverse circulation holes in and around the Great Western, not because we thought it was necessarily the best target, but we had some geologic concepts that we wanted to test. And that's where we were able to correlate the percussion results to the underground sampling results. So we did our first work there. So we also did LiDAR surveys, which were very important. They identified structural zones both on our properties and nearby. So we'll talk a little bit more about the nearby in a moment. So there's what our property looked like initially. You can see that there are veins, the Orleans vein and the Great Western. Those were where the two producing veins were located. There's a big overburden covered area between there and an area out to the east where the Horn Silver American workings were. So we did a little bit of soil geochem just to see if it would work, and we were able to pick up the known workings out to the west and a number of targets that were nearby, which didn't have historic workings on them. So it gave us confidence that soil geochem will work going forward. The rock sampling, as you can see, we worked principally in and around the known workings, but we very quickly identified a number of additional claims, which stimulated us to extend our claim block very dramatically. In fact, we more than quadrupled the land size of our land package, and we made a number of discoveries out to the west of the known workings. As we expanded our claim positions, we picked up patented claims, which covered the Grand Central Mine and the Horn Silver Mine. That's very important for ease of exploration. The work to the west began to look at an intrusive Jurassic Age intrusion, in addition to the older metasedimentary rocks which host most of the known veins. And we've now found vein sets that are localized along the contact area and extend into the intrusion, which begins to suggest to us that we have quite a bit of potential for an intrusion-hosted system, as well as the mesothermal veins, which most of the work has been done on. About 60% of the property is covered by overburden, and looking underneath that is going to be one of the key parts of our work going forward. Okay, so we drilled last fall. It took quite a while to get the results back. What was important from that is that we were able to identify, or confirm that the ore chutes extended below the workings. We were also made quite an interesting discovery along strike in hole 12. In fact, that was the widest intercept. It was 12 meters of 0.22 gold and some silver for 2.4 gold equivalent. It's not the best hole that we drilled, but it was a very important area because it's out beyond the end of the known workings. And it also, when we drilled those holes, we encountered a number of parallel structures, which the old timers didn't appreciate. And we found that a number of the intercepts were quite a bit thicker than what was explored with the underground workings. So we know that we have areas here, both along strike and right in the area of the workings where, I think we have open pit potential because the mineralization extends right up to surface. So we'll be doing quite a bit more work along those vein sets to determine whether or not or how many parallel veins there actually are. So that illustrates that. You can see that the main workings going down and the vein that was explored and mined. But you can see intercepts shown in gold out off the sides where we've encountered other veins that weren't known to the old timers. And for example, the one up near surface is a couple grams. We had indications from our surface sampling, but certainly the old timers didn't follow it down. And you can see from the image there, the workings are really quite open. So that's a section of where those results are on the Great Western. You can see that we've got hits along the known ore chutes, but we also have intercepts out along strike. As we go forward, we stalled our program for several months because we wanted to consolidate the land package. So we grew from an area near the core, which was very limited in size, to the point where we now have almost 5,000 acres under claim. All of the new ground that we acquired is owned 100% by us. The original core areas we can acquire 100% in most of it, and subject only to very limited NSRs. So we're in very good shape with our land package now. So I mentioned earlier that we had indications that we have intrusion-related type mineralization. So you can see in especially the molybdenum and lead results, the vectoring lines, where we're seeing higher numbers to the west that we don't see in the gold and silver. And that's important because it should suggest that the pluton may have been the main driver for the mineralization. And out underneath the overburden cover to the west, I think we've got a very interesting exploration target. So where are we going from here? We've got a large part of our property is covered by overburden, as I said. We'll be looking at that area very closely to see what's underneath the cover. We'll certainly be looking along the contact area between the pluton and the metasediments, where we're seeing evidence of multiple vein sets, stockwork potential, and that I think is one of the areas where a real bulk tonnage system could evolve. We'll definitely be looking for other parallel structures to see if we can put together areas of veining which are close enough together that they can be open pitted. Certainly we know that there are some very rich ore chutes left at depth. Where they last mined in the 1960s, they were mining averaging over an ounce per ton, and those workings are still open to depth. So we certainly have some very good high grade potential we have to look at. And one of the positive features of the gravity data suggests that the overburden depth is very shallow. So it shouldn't be a major impediment to exploration as we explore some of the overburden covered areas. So what are our next steps? We've got airborne magnetic and radiometric surveys that hope to have completed here shortly and the interpretation done. And that'll be followed very quickly by detailed mapping, both the underground and the surface structural mapping. We'll be doing some more soil geochem along the trend. We expect to begin a rehabilitation of the underground at the Orleans, Grand Central, and Horn mines. That'll allow us to get a better idea of what's still in those workings, and it'll also give us a more complete structural story for the whole property. And finally, we'll be launching into an RC program for sure that'll be looking at the bulk tonnage potential to the west and taking a better look at some of the structural story in and around the Orleans mine and some of the other producers. We've been held up waiting for approval from Bureau of Lands for our work on the Orleans, and that's now nearing completion. So that's why we haven't done more work in around what was the main producing mine. We have no impediments on the Grand Central and the Horn silver mines. They're on patented claims, so we can get onto those right away. So basically, in the next, the takeaways for you here are: we have one of the deepest weathering profiles I've ever seen, which is fantastic. It means that the metallurgy on this should be exceptional. We have an area that's seen very little historic workings, and we're really going to ramp up now that we've got our original surveys and our claim consolidation done. We're going to be very aggressive in the next few months in looking at this target. We have underground workings that we're going to be able to re-access, resample, and potentially drill long hole off of that to evaluate stopes that are unmined and ore chutes that extend off of them, and in many cases the adjacent wall rocks, which we think are also of a grade that would be attractive at the present time. In other words, many of the historic stopes were much narrower than the way they'd be mined today. And in fact, our drilling showed that several of the areas are 7 to 12 meters wide. So we think we can have some pretty substantial production from underground if we choose to go that way. Bottom line is all the right features are in place, and GGL intends to be very aggressive in the next few months. Thank you very much.
Thanks, Doug. If all three presenters want to turn their cameras on and join us again, I've got some questions to run through. Doug, you were just presenting, so why don't I stick with the GGL story for the first line of questions. Start with call it mundane, but you did say something right off the bat about how you don't have a ton of money in the bank right now, but you expect to address that shortly. And there's certainly people who are interested in that. So anything you're going to say about that? Any more light you want to shine on
just
that?
Yeah, thanks, Gwen. We have a directors meeting here shortly. We'll be finalizing our exploration budgets, and I expect to raise more money. I never like to run the treasury down too low, and I'd love to have a higher stock price, but the world is what it is. But I think it's a great opportunity for people who want to get an interest in what I think is going to be a very exciting play at a time that all the stars are aligned for gold. I think that we have a lot of upside potential.
Well, I started talking to you about this asset over a year ago, and I mean, you were pretty excited then about the deep weathering profile, so oxide to depth, grade in these mines, which is, tapped some very impressive grades. So like the remnant mineralization right around these mines. Now, a year later, you had such a delay trying to get the rest of the land, which is sort of a story in and of itself. I'm sure you could talk for a while about the challenges and process of trying to get land from longtime holders in Nevada. But how has your level of interest or excitement about this story evolved over the year, right? Since you first sort of.
Sometimes I always feel like I'm a bit of a cold fish when I present, but my enthusiasm level right now, Gwen, is substantially higher than it was when we first talked. Underground mining, mines would be interesting, but they have limited potential for tonnage. And what we've found in the last year is that because of these parallel structures, I think we have potential for open pit areas and larger scale production in and around the existing veins. And the work that's been done out to the west has shown that we have potential for an entire different system, a much bigger, more structurally complex. There's at least a couple sets of veins, and I think we have potential out there for an intrusion-hosted bulk tonnage target that could have potential for much more than our original target of 1 million ounces of leachable material.
Funny how familiar that sounds. There's another company in this webinar who started with a vein target and anyways, intrusion sheeted vein style target, and now there's other vein type targets on the property. That's Riley. But Doug, one more question. So now you've got the land that you need, a lot more information about these parallel structures and this intrusion type target. Like I said, last year you guys were limited in what you could do because you were working so hard to expand the land position, and that needed to happen before you did a bunch more work and that extra land got more expensive as a result. What kind of scale of program? I know you haven't made that determination yet, but like, will it be dramatically different this year than last year?
Yeah, I think it's going to be probably done in 2 phases, Gwen. I'll call the first phase pre-drilling, if you want. And I think that'll have a budget of somewhere around $750,000. It'll include selected soil sampling in areas that we think that soil sampling will be beneficial. That'll include the geophysical survey. I mentioned it's a airborne radiometrics, magnetics, and electromagnetics. So we'll get a lot of information out of that. Structural mapping for sure, because it's very important. We get a really good grasp on what direction to drill our holes and optimize that. But it'll also include the rehabilitation of the underground and the underground sampling programs, which we don't dare drill around any of those workings until we have really good underground maps. We'll do underground LiDAR to get a really good grasp of where the openings are, so we don't waste any holes. And ideally, like I said, if the workings are in as good a shape as what the Great Western is, we can drill long hole off of them, which really reduces the length of some of the percussion holes that we might have to drill from surface. So, you know, we want to get all that done before we even think about doing the rotary drill program.
Gotcha. Quickly, I know this, I referenced it already, trying to consolidate the land, and it was a big process for you. And I mean, everything you just described as the pre-drilling process is also, you know, that's a lot of work. It's a good reminder of how much it takes to get an asset really ready for drilling, which is what the market always wants. Drill, drill, drill. Is there one short story you can tell about the process of getting the land to give people a little insight into what it is to try and consolidate a land in Nevada?
Yeah, the claims we staked were the easy part. It was picking up the patented claims. In the case of one of the properties, the first people we approached claimed that they owned it 100%. And as we did a deeper dive into it, we realized that in fact there were 3 landholder owners, and negotiations, of course, were very complex. You don't want to purchase one portion of it before you have a pretty good lock on the rest of it. So you basically we basically had to acquire all of our land and have everything completed before we could even announce the first portion of the acquisition, because we didn't want to tell the uncompleted ones what we were paying for the rest of it. So it was trying.
It was trying. Yes.
We believe you, there was a lot of certified letters and just trying to even get current addresses for the owners. It was very challenging.
Gotcha. Right. All of the, I often say that junior explorers are like the classic analogy of the duck, right? It looks so simple, just like gliding along. And then underneath, it's just, there's so much going on that often is not apparent unless you dive in a bit more. Michael, let's move, we'll go backwards, talk a little bit about Gold Basin. What I love about this project is literally the layout of the mineralization, right? That it is, and you got into this at the end of your presentation. It is just at surface. It's these layers that are close together. There's hardly any unmineralized material in between. And it's got good metallurgy, and it's just right there. And there's all this potential to expand. And that must be, I mean, you are a mining engineer, so that must be the thing that attracted you to this asset off the bat.
Well, yes. Well, initially we didn't know really. I mean, we had this large database, mainly shallow holes. So really, the average depth is about 50 meters, but over a 13-kilometer strike length. And the guys in the 90s were just haphazard. They really didn't know what was going on, so they were trying to extend the pit, as I said. So they put holes eastern, western, vertical, and there was just a big combination, and so it was quite hard. But once we'd sort of straightened up with initially, I think the drilling in the 30 holes that we put in the end of 2019, we got a bit of a clue, and then through the over 100 holes that we did last year, it became pretty obvious what was going on, and then we were able to tie in. We can look at the historical holes and say, oh, right, that's what it is. You can see where they add in now. But more importantly, it's the same thing to the south. The PLM deposit's got about 30 holes in, and they match up exactly. In fact, the elevations are from the top of the deposit to the south. There's an elevation difference between the PLM deposit, the cyclopic, and the stealth. And probably just a weathering profile, to be honest. But it's just, you can see the top of one, the layers match up the same sort of elevations at the bottom of the cyclopic, and the top of the cyclopic, they match up with the lower ones at stealth. So we've got this advantage that we've got over 500 historic holes, and while we can't use those, some of them might be usable because they're pretty good quality, others weren't in terms of their logs and positions or what have you. So we can use them internally to get an idea. But what we're seeing literally is no real boundaries on the mineralization. There's nothing that's there's no logical or geological structures that stop this thing from expanding both east and west and north and south. Far from it. In fact, every indication is that the Fry mine to the north, which has only got one hole in there, which we can see, but there was an historical record, beautiful sort of little write-up from the government mining engineer in 1936, where they described how much activity went on, and that was much larger than I thought it was. So yeah, that's some 400 meters north of the last hole we put in Cyclopic, and yeah, so it's bulk target, it's from surface, as I said, you know, you can only look at it as one way, as an open pit, and the size will just depend on how much more we expand. But there's literally no reason at the moment we can see why it doesn't extend, you know, at least a kilometre east, where we've got a drill hole sticking out there, you know, and we've got this area which is a stealth. So it is, I keep saying this, it does feel a bit like Christmas in terms of a deposit, because, you know, short of, you know, logic dictates there may be the breaks in there and everything else, but at the moment we're not finding them. It's just we have a lot of drilling to do. That's the reality. It's a large area and it's a lot of drilling, so we just got to logically expand Cyclopic that we know about already. There is something like 60 holes in the stealth deposit historically, which show that that's very healthy, you know, with regard to grades and structure there. But we have to look at it as if we're starting from scratch, given the nature that there are historical holes. So if you like, unlike some of the chaps who are sort of doing not much more sort of base exploration, we do have the advantage that there are a number of targets which have already had some historical drilling that now makes sense to us, and we can look at those each one as a stage exploration in terms of drilling. And when it came to the geophysics, which I mentioned, we did a full suite of this with this IP, which is going to add into it. So we're pretty happy what we've found out from that. As we said, it was enough information, particularly with this hyperspectral survey we did, for us to actually peg some extra ground, which, as Doug was saying, was a bit of a learning process, learning how to do that in Arizona as well. Not quite as easy as it is here, where we can just go online and pick the blocks we want. So that was a little bit of an effort, which Charles must take most of the credit for there. Yeah, and similarly, you know, we've reached agreement. Well, it's you know, we're finalising things with lawyers with one of the prospectors there, which we've had the ground for 50 years, and like Doug was saying, you know, it was a partnership, and those people have died, and then the children are involved, you know, and there's a whole host of things. But you know, we're pretty confident that will be sorted as well. So that's pretty good. So we've expanded the land package there as well.
So, like you say, it's open in most directions, and the lots of evidence of, you know, potential for continuity, and no reason to think that it isn't. So that brings up the sort of classic question that a project at your stage faces, which is, when do you pin a number on it, right? You have a lot of data, and in some ways it's easier to market a story once you can say, we have this many ounces and it's at surface and blah blah blah, we know the metallurgy. And yet it's also hard to make that decision because you still see a lot more ground that you want to drill.
It's interesting, isn't it? I mean, there was a recent sale of a company which didn't put out a resource, which went very well.
Yeah, I heard about it.
Yes. It's hard to know exactly. We're obviously planning on one this year with this current drill program, but you do get this thing where I mean, if you look at the drilling last year, I mean, essentially 90% of the drill holes all hit mineralization. You know, it's such a high success rate. Certainly not used to that in this part of the world. So, you know, we got this expansion program. So the short answer is we've been in a position to have a resource out there. I just yes, when do you stop? I'm kind of interested in just keep expanding it, really. And the more you look, you know, you're chatting about it, the more I look at these things, the more excited I get about it, because it's sort of, you know, you see that there's a mine there. I really see there's a mine already. Internal numbers show that's the case. I keep saying it really depends how big this is. It's an open pit. It's got everything going for it in terms of infrastructure, where it is, you know, and you know, heap leachable oxide deposit in that part of the world is fantastic, and we've just got this continued growth. So, as I said, we've got a 1.4 million drilling program underway. We drilled 22 holes in January. There's a little break for maintenance. They'll be coming back. We may put a second rig on there just to speed it up a little bit. That will depend on availability. So we've got sort of cash in the bank to do all of that, you know, through. And looking at that, we'll probably be finishing up, you know, way it's going, probably mid-April, I would guess, maybe late April. And then, you know, we'll look at the resource from there and see how we are. It is one of those things though where we will continuously see the gaps because we can't fill in the kilometre each way yet, you know, but it's a nice problem to have, to be honest with you. So.
Fair enough. Okay, nice to hear. Yeah, that's a clear plan, and get to the end of this program and see if it's time to make a count. In the interest of time, I'm going to move to Todd. Everybody's been online already for an hour and a quarter here, and I respect people's time. So let's ask Todd a few questions here. Todd, looking back on your first year of work at the project, I mean, there's been a range of stuff, of kinds of results or of information that's come in. If you could pick one thing that stands out from that range of results that gets you the most excited, or that has changed the story in a positive way the most for you, what would that be?
That's a great question. I would say the boxes that were checked with high graded surface, high grade subsurface, and then some of the iterations, I don't think there's one specific pinpoint. I listened to Doug and Michael actually, and I picked things out of what they speak to, and we have very common ground. I don't know if you could say that about every junior that exists. Doug, I could probably throw a rock over to Gold Point from where we are, so we're closer than most people on this webinar would probably think, and we should probably have a beer one day and break some bread. But it's to me, and I think to our team, which we didn't get a chance to go into, whether it be Charlie that spent 22, 23 years with Barrick, and Hillary, who has great history, William, our chairman, who was, has found diamonds the size of tennis balls in Botswana. I think it's the iterations. So, and as we're moving forward from that first initial sample program, drill program, layered on top of the old work, now we're just getting the geophysics in it so early, can't really get too crazy about it, but it just seems to be adding layers of interest and areas that we can advance to, similar to what Doug had commented on with regards to the intrusive related and the Pluton. I mean, I mentioned in our presentation that we had a 20-hole drill program announced, and we did 12. Part of the reason for that was the definition of insanity. We see the mapped veins, we drilled them, we got the results we were expecting. It's okay, there's no point in continuing to drill that. Let's use some of that budget onto other items to try to build the story. The hydrospectral work that Michael talked about, we've done some of that as well. It wasn't in our slide deck, but that has caused us to be cognizant of other maybe land and other items that we need to be paying attention to. So I think it's iterations.
Gotcha. Okay. You mentioned Hillary when you were doing your presentation. You and I sat down with her a month or two ago. Do you want to talk about the contribution that she's made to this asset and to how it's progressing? Because it seemed to me like it was that she's been a pretty important addition to the team.
She's been a great addition to the team. I mean, but the team, certainly started with Charlie and his massive experience with Barrick. And getting people, I think both guys will appreciate this, and the whole sector will appreciate it. Our sector has been so busy, whether it's a drill rig or we're trying to find people, is extremely hard. I mean, those are good areas to find good people, but good people have good jobs already. So Charlie was fortunate enough to come across Hillary, and we were fortunate enough to have Hillary come on. I mean, she had last work down at Augusta, down in Beatty, mapped some of the Bullfrog mine, et cetera. And it was her keen eye that what she saw there and is adding a lot of value to the sort of secondary, not just intrusive related system that we're seeing 2-3 kilometers on our southeast, where we're seeing this epithermal type. So her contribution has been great. Charlie's contribution has been great. I'd like to say I have a contribution that's great, but they're definitely the smarter of the threesome here. So just happy to have everybody on board.
We all have our roles to play. Okay, so there's obviously you're going to be keen to do a reasonable amount of drilling this year. The details yet to be determined once you get more information in of this iterative process, like you say. Do you want to talk just a bit about, and I could have asked any of the guys this because I think the answers will be similar, but about sort of the cost per meter and the ease of operating down there. Do you know the cost per meter that it is for you to drill?
I'm going to plead the fifth, not because I can't answer your question. We had some difficult drilling in the first part that caused us we had to change out rigs, and we weren't drilling. We weren't sort of bringing this name in. I think Michael alluded to it. Well, we weren't doing Great Bear type numbers, 100,000 feet of drilling, or or someone else would. So we have to deal with where we can be fit in, and sometimes you pay more for that. So I'll plead the fifth on the exact number because that might hurt me in negotiation on our next round, or Charlie, but it's not cheap when you're doing smaller programs. What's going on with it?
Yes, this is true. Fair enough. Okay, I had one specific question. I referenced that the junior space has struggled despite a fantastic gold price, blah, blah, blah. Riley Gold is down, as are probably all of these stocks. I'm not even sure. Someone specifically asked, are you buying, Todd? There's there's investors out there who pay a lot of attention to insider buying for good reason. So yeah, I'm going to put you on the spot and ask if you're buying.
It's almost like you knew the answer, or whoever asked the question knew the answer. I bought 35,000 shares on Friday. I don't know if it's filed yet. It should have been filed today or tomorrow, but so I guess the answer is yes. But no one would know that because I don't think it's even been filed yet.
There you go. So, there's a very specific answer to a very specific question.
in our sector, it's. I'm sure the other guys do the same thing. When you have a couple extra bucks, if you believe in what you're doing, you try to pick away when you can. And we're in a lot of times we're in blackout and grayout times because of financials, or I think Doug alluded to it. The time to get assay results was and is ridiculously long. And in some ways it kind of helped us in a way because we finished drilling sort of end of August, beginning of September, and we had to wait 4.5 months to get everything out. And during that time, it allowed us to do a whole bunch of other iterations of work that was desperately needed to add to the understanding of what we're going to be doing out there. But at the same time, it also put us in blackout periods that you can't participate all the time. So I do what I can when I can. I can't come to work thinking other than the fact that we've got something great. Otherwise, I might as well, push off and go do something else.
I think that's a good place to wrap it up. I agree. I like that you mentioned the blackout periods because folks in management at junior companies are under blackout, which means they can't buy stock more often than you might think. It's a lot of the time that they actually can't be active in the market. And with that, thank you so much to our audience. We're glad you're interested. All of these gentlemen are easily available or easy to find, and I'm sure would be happy to entertain whatever questions you might have. Pick up the phone and have a conversation with you if you're interested in their stories. I am also easy to find at my website, so you can do it through this webinar platform, or you can find us on our various websites. So thanks to the audience for your interest and for your time today, and thanks to Doug and Todd and Michael for participating. Certainly appreciate you taking the time to tell the stories. And with that, I will say good day to everyone, and hopefully we'll see you for another webinar again soon. Thanks, guys.
Thanks, Gwen.
Yeah.